if you're able to negotiate the house down, and if you have low interest rates, then you get the best of both worlds. So a lot of people should jump on this now, because eventually, if they're gonna keep lowering the interest rates, again, this past couple years is gonna repeat themselves again. And that's what I really hope for, because, you know, it's gonna help everybody.
Okay.
The investors will sell more houses. And
Well, so let me just ask a couple more questions here then. Are you still saying, so you're saying properties are still selling within 30 days of listing, being that they're priced right? The interest rates have pretty much being lowered a bit.
just starting today, as of today.
Okay. And then what sort of appreciation are they predicting for this next year in Massachusetts or in Boston?
So it's still not like very clear per se, but it is expected to continue to be solid.
Okay.
And that's again because the market is not gonna, let me just make this. Oh. And that's because the criteria, the mortgage, the lending criteria are as still strict. So that's really what's helping it. So even though the market is stabilizing, which is not too bad per se, they are really helping it to not crash. Because, you know, if there's more sellers than buyers, then, you know, there will be a problem. But by the end of the day, the houses mostly come from foreclosures, and this is not going to happen because eventually people that got mortgages, they got it based on qualifications. So they're not going to like go, you know, of course some of them will, but those will going to have like very severe situations that cause them, not because everybody in the market is like that.
So have you seen the banks release any more foreclosures or short sales into the marketplace at this point, or not really?
Not very noticeable, like very limited. Yeah, not much. No, there are, of course, but not like crazy, like not what you'd be like, oh my God, like let me call all of my investors and just have each buy 10 of them. No.
Okay.
On the other hand, so there was a program that they did here in Massachusetts that was Mass Dreams, and they were giving up to $50,000. This is now is gone. They closed their doors of November 29. So you could apply to it up until November 29, even if you're not closing until December or January or whatever. As long as you get in, that was the deadline to get in. There is another program which is called Workforce Advantage. It is still going on, and it's actually for everybody. You get a little bit more if you're buying in certain towns. They call them gateway towns. I made a little video I posted on my Facebook to kind of like let people know what Workforce Advantage is.
Do you want to just tell people what your Facebook is now, and you can repeat it again when we talk about investor friendly realtors?
Sure.
If you just want to pull that up. And while we're on the topic, before Walter takes over here, I've understood there's a new way that FHA is going to qualify people, and it's not based on credit score anymore.
You know what? Thank you for bringing this up. Someone called me today and told me, did you hear about that? I'm like, what? Like, this is bizarre. Like, if this happened, like, I don't know what's going to happen. I heard of it. I reached out to a couple lenders. I couldn't get hold of anyone to just get to the bottom of it. But what I heard that it's specifically not for FHA, but specifically for Bank of America. And Bank of Boston's are doing this because of, they had a lawsuit or something. So it was mostly because of, for minorities, or like, Black or Hispanic, or if you're a foreigner. So I'm like, okay, well, great. Now it's time to call everybody. Right. But they is not going to be based on credit. I think it's going to be based on income. Still, they're going to make sure that you're making the income. And something else that I can't remember. I think I read it. Let me see if I still have the thing open, because I kind of looked it up quickly. Oh no, of course I closed it. But it was based on two things. Let me just try to pull it up quickly.
they were still suggesting that people should, always try to increase their or clean up their credit record, but it wasn't a big deal anymore. So more people could enter the market.
That's what I
and
heard
it's
out
easier
too.
with DSCR loans, just for, they're giving loans out based on the income of the property, based on, you qualifying for a loan now. So, there's stuff going on, I think, that will make the market healthy still, which means I
Yes.
believe there's a ton of room for investors
Yep.
using certain strategies where
Yep.
some strategies might not work as well or as fast. Other strategies will work extremely well. So
Yep.
with that note, I'm going to let Walter turn it over. I've made him host, and
Yeah.
I'm going to sit back and listen. I'm still waiting for, if anybody sees a beer, get on, please accept her in.
Of course.
She's having some difficulty, so I'm going to work with her in the background and get her going. Well, yeah, thank you, Sarah, for your synopsis.
My pleasure.
Awesome. Let's give Duncan Weirman a round of applause, getting it all set up behind the scenes. Let's give Sarah a round of applause. Great information. Hands to the camera if this is your first time at the Boston RIA. First time, any newbies? Awesome. All right. All right. And for everybody, I just realized there's a lot of people out in the no camera on, no can't see you mode. So for everybody who doesn't have their camera turned on, this is a good time to turn your camera on. And I'll just say the reason why is because we're real estate investors. Hands camera if you're here to buy real estate, want to buy some real estate, want to raise some capital. Who here would like other people's money? OPM. All right. So, well, the only way somebody would ever work with you is if they recognize you, right? You've heard in business before, they got to know, like, and trust you. So what's the easiest way to get known is to be seen, right? The easiest way to be seen is to put your camera on in a place where there's already a bunch of other eyes. You want to go to places where there are eyeballs, and then be seen there. Handscan, if you understand, that's pretty simple marketing. It's actually very easy to, in a targeted place like this, by the way. Again, this is the Real Estate Investor Association of Boston. This is where other real estate investors, other lenders, other professionals are going to show up. So this is a really good place to meet people. So the only exception I'll make for people turning their cameras on is if you are completely naked or if you're beating one of your children. If you're doing either one of those things, it's a great time to have your cameras turned off. Handscan, if you know, we don't do those with the cameras turned on, right? Don't beat your kids unless it is required. You know, who here was beat as a child? Anybody? I got beat up? Kids? No? I guess okay, Brandon, you get it. That makes you a successful real estate investor, right? You learn the rules and you don't mess up. But real estate's going to beat you up way worse than your parents ever did if you don't understand the laws, if you don't understand the rules, if you don't understand how to take advantage of situations. Who here is ready to learn some strategies, some ways to avoid getting beat up in this game? Awesome. Give yourselves a round of applause. You're in the right place. And I'm going to share my screen. And for everybody who's just jumping in, now is a good time to turn your cameras on. This is a great interactive event. The way we run all of this is it's all about you. It's not so much about come here, listen to us talk. It's really about you becoming successful. So feel free to be dropping questions in the chat as we're going. And if you have questions, put your hand up and we'll call on you as we see it. So who here can see my camera? Hands the camera if you can see my screen. I'm sorry. Screen. All right. And Nancy, I have no idea how you did it, but somehow you are completely upside down. Who also sees Nancy upside down? Fantastic. You have defied gravity. Let's give Nancy a round of applause. She doesn't even know what she did, but she's upside down to all of us. So, all right. So Boston, this is December. It is cold outside. As you may have heard from the Game of Thrones video and movies and memes, winter is coming. It's already here. We're in a recession, which is the best time to build and buy real estate. More millionaires are built in a recession than any other time. Hands can if you've heard that before. You know it to be true. Excellent. So this is the time not just to be doing real estate, but to be learning and to be learning it the right way, not the way that gets you in trouble, right? There's a lot of people who are in trouble right now because they bought real estate wrong. Hence, if you commit to buy it right, we make our money on the purchase. Remember, we buy it right. Excellent. All right. So we're going to talk a little bit about that today and also some of the advantages of real estate. So we are the Boston RIA. This is our December meeting. We are the #1 RIA of all across the country. I do want to point out, if you are never been to the Boston RIA, put your hand to the camera. If this is your first time, any guests, newbies? All right, Brandon, Ed, let's give them a big round of applause. Welcome, guests and members. If you're already a member, you already get all the benefits. We got some more benefits we're going to talk about later tonight. Duncan actually shot me an email. Really cool. I'll share them in a little bit. First, I got to read the liability disclosure. This is written up by our attorney, so we don't get sued. Hands to camera if you never want to be sued. Excellent. Awesome. Okay, we're all on the same page. Very cool. So I'm going to read this to you so that never happens. Boston RIA assumes no liability or responsibility for the outcome of any real estate transaction, decision, or other action that any Boston RIA member or visitor enter into as the result of attending or any meeting, listening to any guest speaker, or talking to any Boston RIA member, guest, visitor, or persons. Hence, the camera, if we understand we're adults and we're responsible for our own actions. Excellent. Awesome. So if something happens in real estate and you weren't paying attention, you can definitely contact us, reach out to us, so maybe we can help you with the situation, but do not blame us. We're simply guides. That being said, we are #1 in not just being the coolest RIA, but we're also #1 in deal flow, in networking, in education, and investor resources. There are a lot of fakes out there. There's a lot of wannabe groups who are claiming to, I'm in Tampa right now, and I see associations all over the place. Everybody says that they're a real estate association, but there's really only 86 of us all across the country, and you're in one of the biggest ones, in fact, the coolest one. So give yourselves a round of applause. This is the actual Boston RIA. We are with the actual National Association of Real Estate Investors, and I got to go to the semi-annual meeting this year, and they gave us a lot of credit for being the coolest. Hence, Cam, if you know, we are the coolest, and now you're hanging out with us, so that makes you cool too. We've got sponsors because the National RIA has done a lot of work behind the scenes. We've got Home Depot, we've got Real Protect, Rent Perfect, Office Depot, and my favorite, well, I can't say my favorite, I like them all, but Equity Trust is how I've raised a lot of money. Who here would like to raise money from other investors? Maybe help them untap their 401ks. Who here has a 401k? You'd like to be able to untap it and get it into real estate. If you don't, well, some of you already cashed out your 401ks, right? Got rid of them a long time ago. So if you have a 401k, Equity Trust allows you to tap into that equity and pull it out so you can invest in a self-directed, your own money, your own investments. You control it versus being like, well, let's see how the S&P does today. Who here's gotten beat up in the stock market recently? Ever heard of people getting beat up? Like, nobody wants to raise their hand. I got beat up, right? Everybody did. Nobody, when you just hold, nobody wins on a down market, except for the guys who short. Different story. That's a job. That's not real estate. All right, we got partners. We got partners who have money. Who here said they wanted money? Wanted capital, wanted some of this moolah to buy some real estate. So some of the people we borrow money from are lenders, private money lenders, people who have money, who are, not necessarily banks, but they've got access to capital. And some of our partners are Monteverde Capital, Universal Capital, JM Capital. By the way, notice they all have capital in their name. It's to be very clear that that's what they do. They put capital into your bank account so that you can go and do real estate deals. Do we have any of our sponsors, any of our lenders on the call today? Looking around, I don't see any of my peeps. All right, well, here's what I'll tell you. I hung out with a lot of these guys over the years, and the people at JM, at Monteverde, and at Universal, sorry, not Universal. Yeah, it is Universal. So these guys, they spend a lot of time figuring out the market. If they won't approve a loan for you, if they won't give you the money, do not do the deal. They're sophisticated investors. They know how the market works. They know how real estate works. If they're telling you the deal is okay and they're going to give you the money, cool, do the deal. It probably makes sense. They don't want you to fail. They want you to do well. So they're not going to hand you money if they think there's a good chance that you're not going to be able to make money on it. Hence, Karen, if that's a good kind of partnership. It's a great double check. In fact, I recently I'm going to tell you a story. Who would like to hear a story about somebody who lost $1 million? Like lost $1 million because they were just stupid. All right. So I do a lot of mentoring. I do a lot of coaching. And this person, I talked to them about 3 years ago, and I gave them some really good advice. And then they didn't follow it. And so what happened was they quit their job to buy all this real estate. And then they called me up 2 weeks ago and they said, hey, all that advice you gave me? I was like, yeah. Did you do it? How'd you do it? They were like, no, we didn't follow any of it. And here's what's happened. Now we own $6 million worth of real estate. We paid $6 million for this real estate, and it's worth $5 million. And I was like, how did that possibly happen? They said, well, what we did was, and listen to this, where you get in trouble. We borrowed a whole bunch of money from our friends and family. They're talking millions of dollars. They bought properties in cash from their friends and family, just borrowed millions of dollars. And now we're finding out that we paid more than the properties were worth. I don't know how anybody pays more than the properties were worth in the last 3 years. Hands can't understand, it's been the market going up, right? I don't know how anybody who bought properties 3 years ago, 2 years ago could mess that up. And then they told me, but there's 3 properties that are really bothering us. It's the ones with the hard money on it. I said, what do you mean? Let's take a look at those. And we looked at the prices and I said, well, those are the only ones that you're not underwater in. Because the hard money lenders double checked and made sure that they bought at the right price. All the other ones, they didn't have a hard money lender on the deal. They just borrowed private money willy-nilly and ended up overpaying. And Scam, if you understand, sometimes it makes sense to have a professional take a look at your products, to have somebody else. Even if you're not using a hard money lender, it still makes sense to have them go take a look at the project because they know if it's going to work or not. They've been in this game long enough. That's just a warning. Hence the camp, if you understand, I hate seeing people lose money. There's no reason for them to have done that. All right, so Boston REIA has a newsletter. There's a lot of new information coming out, especially for landlords and real estate investors, especially in Massachusetts. We are a highly regulated state, and it's really important that you understand the regulations that are happening, the shifts and changes, like we were just talking about with Sarah. So get onto our newsletter. The newsletter goes out periodically, and the stuff that's in there is really, really valuable. It's also where you can get access to deals. Handscan, if you want off-market deals, anybody interested in off-market properties? Cool. So go to Boston Real Estate Investor Association.com, Boston Real Estate Investors Association.com. Put your email address in, and I promise you, all we're going to do is email you information. Cool, valuable information, cool newsletter. Awesome. I'll leave that on the screen for just a second longer, and then I'm going to shift the screen. So it's Boston Real Estate Investors Association.com. Go in, put your email address really quick. And I got something cool to talk about. So who here has heard that relationships, your network is your net worth? Who's heard this before? Your network is your net worth. Excellent. So what we found is since we've been doing everything virtual, we're getting a lot more information. Since we've gone virtual and we've done our trainings and courses here, more people are able to log in, more people are able to show up, and more people are making time for their own education. But we also recognize that live in-person events are where people build real relationships. This is where you meet your partners, where you meet wholesalers, where you meet real estate investors who are looking for passive investments. And so we're doing networking events. Again, we're bringing them back. We have one in Foxborough. The dates are coming out. We have one in Foxborough. By the way, get on the newsletter, right? Duncan, they get on the newsletter. We'll send out the dates for the events.
Yeah, we'll we'll send it out in a newsletter, and they're going to go on our event calendar on our website. So you'll get a couple different ways to see them, and we'll start publishing them across the social media.
Awesome. Let's give Duncan a round of applause again. This was a big decision for the Boston REIA to come back and start building these networking events. In the past, we just had one location in Dedham. And what we're looking to do now is expand to a lot of different locations, multiple times a month. This way, you're able to network with different investors from different markets, which is going to help you increase the amount of partners, the education, mentors, and potential deals that you're going to have. Hands to camera if this is a great idea. It's, even if you don't know, it's a great idea. Trust me. This is going to change the way the game is played. This is one of the reasons the Boston REIA is above the rest. Another cool benefit that Duncan's done this week, this month, is he's added a course. This is free education, on-demand training that you can get when you're a member of the Boston REIA. All you gotta do is go to BostonRealEstateInvestorsAssociation.com and you can register to become a member and then go in and get the free joint venture facilitation course. I will tell you the course is free, but membership is not, right? So you do have to be a member in order to get access. Don't worry, membership is super affordable if, of course, you want to be in real estate. It's extremely expensive if you want to go and do nails for a living. Hence, if you understand, you pay for a little bit and you end up getting a lot. It's kind of like the BJ's card or the Costco card. You pay like that membership and you get access to all these cool things. So this course, this is something that Duncan taught for a long time. You can actually look at the picture there. That's young Duncan. So, so he's extremely experienced. Been doing this for...
Yeah. So,
and
hey, I just
actually
want to say that
me with a 10.
I did, do the whole speaking circuit and tour and that, and I wrote a lot of courses. This particular course sold for $497 and was sold over 3,000 copies. It does mention a usage of a software in there, and the software that this book has complements not only the lead finder software I have, but the websites with the leads that we provide you every month, every week, actually. The Real Flow, which is also, you can trial for 30 days free. I put that offer out there. Next month, I'll be uploading my probate profit system course. The month after that, I'll be launching the junior lien cash machine, how to buy second liens and cash in on those. And we'll be doing wholesaling and other courses as we go. But this particular course talks about using options and lease options and how to put the two parties together. It's a really good course. A lot of people made money with it and still making money with it. So like I said, for members, it's under the marketplace. You'll see that it's free, and you just click the link to download.
Let's give Duncan Weirman a big round of applause. He's working hard behind the scenes so that you can have the information education on demand. This is on demand. You can go click on it anytime, but don't, just because it's on demand, you can click on it anytime. Don't push it off. This is the sort of thing you go and you watch and you learn. The sooner you learn it, the sooner you can take action on it, the sooner you get results. Hence, if you understand, results are only coming to you with action. It's not about education. It's about what you do with it. So transform that education into action so you can get some results. Speaking of the membership, there are some benefits besides just getting free education. Here, by the way, thinks free education is a good value, a good reason to be a member. It's already good. Yes, but there's more. But wait, you also get access to the monthly events. You get access to our subgroup meetings, which we're going to be increasing more of those for your benefit. You're also getting access to the Home Depot 2% rebate, which there's also more than just 2%. And you're getting access to some exclusive members, some workshops that we do, and much, much more. The Boston REIA is 100% behind the idea of building wealth and helping people become financially free. As we continue that mission, we add more components, and the memberships are how we fund all the extra technology, all the extra people we have for speaking, all those little different things that are beneficial to you. Hence, if you understand, this is a not-for-profit organization. So there's money that has to come in order to fund these things. Kind of like PBS, but way cooler and kind of in person where you actually can interact. And speaking of, we do have discounts at the Home Depot. Sarah, do you mind sharing a little bit how that works? Yeah, you're so cool.
Absolutely.
Let's give Sarah a big round of applause.
Thank you, Walter. I will share my screen, but before I start sharing my screen, first I didn't get the chance to also tell Duncan, but I wanted to make a big announcement that I am now licensed in New Hampshire as well as Massachusetts. So you can absolutely, I'll be more than happy to help you in Massachusetts and New Hampshire as well. So that's number one. Number two, I also would love to, Duncan wanted me to show you about just my page. I try to post, let's see, I found it. So I try to post updates, you know, for everything, what's going on in the market. I don't know if you can see my screen. So, you know, for example, rates are actually, you know, almost officially today started to go down a little bit. So I wanted people to know about it, give some tips for buyers and sellers. I made a video about the workforce advantage, stuff like that. It's basically just, you know, to help people to just know what's happening in the market. Even if you're a buyer, retail buyer or an investor buyer, you will benefit from this because they're all related by the end of the day. People need to live somewhere. Investors are providing this. So we're all, you know, help each other. So just feel free to find me, Sarah Ibrahim, my Facebook page, as well as the profile. Friend me and reach me if you have any questions or anything I could help with. On the Home Depot, which is absolutely fantastic, lots of our members, they benefit from that. I am going to share. Just admit here and share my screen. Okay, so Home Depot, they have a rewards program that they do only for our members. So if you go to Home Depot, they would still give you discounts, but you get more because Duncan and Kelly have negotiated a deal for only for our members. So our members, they get a 2% rebate biannually on all purchases. The only catch here is that you need to spend $5,000 per period. So the Home Depot has two set periods, which is January 1st until June 30th, and then July 1st until the end of the year. So those are their fixed times. So let's say if you join, if you join the program in August or September, you have until the end December 31st. So you need to spend the $5,000 with in the rebate in the rebate cycle, in each rebate cycle, to qualify for the gift for that 2% rebate. And
I just
how
gotta
it works
say that is so easy to do with inflation right
Totally.
now. I mean, I could buy like
Absolutely.
3 cabinets and spend $5,000.
That's it.
Half a kitchen.
Literally, exactly. Not to mention, everything else, paint, flooring, all materials, windows, bathrooms, everything, appliances, anything and everything. And all that is stackable with whatever store discounts or promotions going on, at the time when you buy. How it works with the Home Depot is that you get a gift card. Anything under 1,000, it goes on a gift card. 1,000 or more, you get a check. So make sure always that Home Depot has your most updated mailing address, so you would not, lose your rebates. Our members only start at the gold tier with paint. What does that mean is that our members, they get 20% off paint immediately. They don't need to spend any money, and that has nothing to do also with the rebate minimum, with the $5,000. So you can join today, Boston REIA, and I will set your account up on this Home Depot Pro Extra, and then the next day can go and buy paint. You get the discount, the 20% discount immediately, and you get that at the checkout. All you have to do is that you register. So basically how it works, think of this as a rewards program, as like CVS or Shaw's or any of the rewards program. So they're going to need your email and your phone. And we use the same exact information that you use to sign up with Boston REIA. That's how the link, that they know that you're the same person, basically. So all you do is that at the checkout, enter the phone number that you used to sign up with us, and you get the discount immediately at the checkout. Now, even though this is a rewards program, it's not a credit card. They require you to register a payment method like a Visa or a checking account. They have several options that you could choose from, and there's no limit to how many cards or how many accounts you would use to make purchases there. And that's the only way to collect your 2%. So now if you pay at the checkout with a registered card or payment method, you get the 20% at the checkout, and then you get the 2% at the end of the 6 months cycle. The 2% and that program is actually fantastic because you can track your purchases for up to 24 months. So the 20% is only applicable to paint, stains, and primer. It has to be a gallon or more. It doesn't apply to quartz or spray or any of that. Also, our members can get up to 20% off select Hampton Bay kitchen and bath cabinets if you buy 10 or more in a single transaction. How does it work? Is that you get 10% from National REIA and 10% from Home Depot. And both discounts are applicable with any store discounts as well. So you can potentially get more than the 20%. Volume pricing program or bid room. This is absolutely amazing. Lots of our members benefit from it. All you have to do is you need to have a list of a large items that's going to cost $1,500 only in a single transaction. Just bring that list to the Pro Desk and have them prepare a code for you. And after they do that, just have them send it to the bedroom, and it comes back within a few minutes with all the applied discounts up to 15%. And then, after that, you just enter your phone number at the PIN pad, and then you get the 2% once you pay with a registered card. The only thing that I wouldn't send through the bedroom is the paint, because you get a better deal with the 20%. Has nothing, it's 15 is the really maximum in the bedroom. In the past 6 months, Home Depot paid out to chapter members more than $500,000 in rebates. So this is real, like this is really happens. About an average per member is almost $1,600. This alone in 6 months, in one rebate cycle, you can buy memberships for years. If you're a single or if you're having a partner, this is alone is in on top of all the education that Duncan always bring, either speakers, either courses that he tries to upload to the portal. It's a no-brainer. It's a great deal. And it had the great thing that it hasn't gone up. Everything else has. They still keep it very affordable. So take advantage of it while you can. You never know what happens in the new year. But definitely, Kelly is fantastic. You can call her, you can text her and tell her, this is, I would like to join, or I don't know if my membership expired. She's going to take care of you. And after that, she's going to pass your information to me. And then we're going to set up a time in which works for both of us. It only takes about 10 minutes. Very simple. We do it directly from the website of Home Depot. And that's it. You're good to go. And thank you, everyone.
Let's give Sarah a round of applause. That is some great information. She talked about the memberships. I wanted to put that price on the screen for everybody. It is $280 per person for the membership, and for couples it's $380. So bring your spouse for an extra $100, and essentially you're getting access to all of the Home Depot discounts that she just got. Hands to the camera if that makes sense. We understand that's very affordable. Me and my partner, we save more than $3,000 a year with the Home Depot discount because we use the bid room and all of our paint comes through Home Depot. In fact, we've spent thousands of dollars on paint just in one time because we bought 5 gallon buckets, and we said, okay, this whole building is going to be painted this color. It's our color. And that's how we buy paint now. We just go grab 5 gallon buckets at a time, and it sits in the basement of each property and we don't have to think about it. In fact, if you do the math, we're actually getting 1 bucket free every time we buy 5. All right, 20% off. We're getting 1 bucket free every time we buy 5. Hands to camera if you like free things. You like me? I like that. It's actually every time you buy 4, the 5th one's free, which is why you buy the 5. So it's a cool strategy for making a little bit more on your real estate investments. Who here knows a penny saved is a penny earned? Oh yeah. So if you're doing deals, then it makes a lot of sense. Let me slide back to one of the other cool things that we'll throw in with it is the Recession Proof Conference. This is something that's happening in Orlando this year. The tickets are $1,000, well, $997. But for everybody who signs up for the Boston RIA tonight, we're going to throw in 1 ticket per person. If you're a partner, if you have your spouse with you, then you're going to want to go for the partnership membership. We're going to give you 2 tickets. That's $2,000 worth of tickets for the price of $380, plus access to the Boston RIA, plus obviously the Home Depot discounts. Hands to the camera if that's a no-brainer. We've made it now silly not to. I agree. But wait, there's more. And it's really cool because this is the biggest association. So there's a lot of deals when you join in to the Alchemist, to the Boston RIA. It is an honor to be investing with you guys and gals. Let us help you get through the process. You can get in trouble in real estate. Who here has heard that some people have lost money in real estate? Who's heard this before? No, it's true. Remember 2008, there were some people. It takes being a part of the right tribe, the right group, having the right people around you in order to make sure that you don't do it wrong. You got to make it done. You got to get it done right. Surround yourself with the right mentors, the right team, the right coaches, the right guides, and accountability partners. So join the Boston RIA. I want to encourage you to join us. And for everybody who is not new, all our members, now's a good time to drop in the chat. We're going to do our haves, wants, and needs. So haves, wants, and needs. Drop in the chat. What is it you're looking for? Real estate deals? Are you looking for capital? Are you looking for partners? Are you looking for contractors, plumbers, electricians? What are attorneys, tax professionals? What are you looking for? Drop it in the chat now. And also drop your contact information if you'd like somebody to reach out to you with one of those solutions. Hands care if you know that's how networking works. Yeah, you got to be able to reach out to each other afterwards. So share what you're looking for. For me, my example is I buy real estate in Fall River, Massachusetts. I buy 6+ units. I do not buy 1 bedroom. So it must be 6+ units. So it'd be, I guess, 12 bedrooms to 36 bedrooms, all within the same property. Hence, care if that's super clear. We know what city I do it in, what state I do it in, what type of property I buy. Perfect. Drop what you're looking for in the chat. Like Sarah mentioned earlier, we do have realtors on the call. Sarah's a realtor in the Boston market and now New Hampshire. So if you're looking for property, she may be able to slide you some deals. Hence, care if that's helpful. Access to deals. Awesome. There are also private lenders in the call in the room. I myself lend, Duncan lends. So you may be looking for a lender to invest in one of your properties. You might want to put in maybe your experience or a project you have going on so that we can contact you later on and say, okay, like, cool, let's talk about it. So now's the time. Have, wants, and needs. Share in the chat. And again, one more time for everybody who's jumping into the membership. The phone number on the screen is how you get in touch with Kelly. That is 864-906-4111. And like I've said in the past, just throw her number in your phone. It will be the best thing you ever did. She's in contact with everybody and everybody you see on the RIA, in the networking events, outside of the networking events. If she doesn't have contact to them, I have contact to them. Sarah's contact to them. Duncan has contact. So grabs Kelly's phone number. I won't be putting mine out there. So grab her phone number. It's 864-906-4111 and just text her your name so she knows who you are. Hence, Karen, if that makes sense, that's already networking 101. Talk to the smartest person, the most connected person in the room, get their contact information, let them know who you are, and then let them know what you're looking for. This is a networking hack that I learned a long time ago. I just go to the biggest, most networked person. I get their contact information. I let them know what I'm looking for. And also, it doesn't hurt to ask them what they're looking for. Who knows? That's a great way to build rapport. Great way to build a relationship. Awesome. So again, Kelly's number 864-906-4111. And without further ado, today we're talking about taxes. Who here has ever paid taxes to the federal government before? Ever paid taxes and wish you didn't pay so much? Me too. I remember one year I paid $56,000 to the government, and I said, "Oh my goodness, what did I do?" And ever since then, my income's increased, but my tax burden has gone down. Hence, if you know, there's some great tax strategies to do that. So today we're going to bring Ibir on, and she, right? Is Ibir?
Yes.
Oh, there she is. All right. I just double checking. So Ibir is the founder of Wealth Building CPA. She's going to teach us today creative tax planning strategies for real estate investors. And you're going to find out what's working now in your market and how it can work for you. Without further ado, let's give Ibir a big round of applause. Welcome to the Boston RIA. For everybody whose cameras are turned off, this is a good time to turn your cameras on. Especially, in fact, Ibir, give me one more second. For everybody whose cameras are turned off, let's turn those cameras on really quickly, just so that Ibir knows there's people on the call. If she doesn't think there's people on the call, there's a good chance she's going to log off on us and not give us all that great education. So for everybody else who's sitting out there thinking, should I have my camera on? Should I turn it off? Yes, just for the first 5 minutes so that Ibir knows she's not alone. Hence, Karen, if you understand, it's hard to speak to nobody. It feels like you're speaking to a wall, right? So get the cameras turned on. And, you know, again, real estate is a contact sport. If you're afraid to be seen, you probably don't belong in real estate. This is about communication. It's about networking. It's about sales and doing deals with each other. And how could they ever do a deal with you if they don't know, like, and trust you? So it's really important to be seen in real estate. I know it's scary sometimes to turn that camera on. You know, you're hiding. You're like, I don't know. You know, I'm in a hotel or I'm in the bathroom. Look, if you're in the bathroom, you got my full permission to not turn the camera on until you get outside of the bathroom. But once you're back at your office, once you're back at your couch, your recliner, or you're in the car driving, please turn the cameras on. It'll make Abir a much, much better speaker. Hands to the camera if you know, we love seeing other people's faces. It's just part of what speakers do. We're the crazy few who actually love seeing you and your camera is turned on. So let's give all of our beautiful faces a big round of applause. Thank you, Claudia, Ed, Wade, Sarah, Paula, Pauline, Lou, Brandon for turning your cameras on. I appreciate it. I know Abir appreciates it. Let's all give her a big round of applause. Hands up where she could see them. Abir, they're all yours.
Thank you, Galter. Thank you, Duncan. And thank you guys for having me. We are going to be talking about year-end tax planning. If you guys can please enable my screen sharing so that I can share. This is going to be really quick. I have a huge, big event coming up this weekend at my church. So I only have about 45 minutes, but usually we're able to cover most things and take questions within that time. So let's see. There you go. So can you guys see my screen? For those of you that don't know who I am, my name is Abera Koye. I'm the Chief Cook and Bottle Washer of the Wealth Building CPA. I offer primarily wealth building services to real estate investors. So 90% of my clients are real estate investors, and we love to implement strategies all the time to help you reduce your tax burden and to build your wealth. So we're going to be looking at a top year-end tax planning checklist, things that my clients usually would implement to help to bring their tax burden down. So the first thing is to understand that April 15th is your tax filing deadline, but December 31st is your tax savings deadline. So it's really understanding the difference between a tax filing deadline, compliance. That's what the IRS wants you to worry about. They want everybody worrying about April 15th, right? The alphabet boys, IRS, FBI, the whole 9 yards. They just want you worrying about April 15th. But if you are a real estate investor, a wealth builder, and most of you on here are, you want to be worried about December 31st, because if you don't implement these strategies by December 31st, it's too late. You're just reporting what has already happened. So I'm just going to go real quick through the different things that we implement. I'll pause, take any questions, and we'll keep going through the different things. So these are things to kind of juggle your memory. And if you have this stuff, you may want to think about doing year-end tax planning. Okay. And we say here, you can either pay the IRS, pay a tax preparer, or pay a qualified CPA to come up with some tax reduction strategies. All right. So the first question, if you own a business, do you have an EIN number? Do you have an operating agreement? Do you have a separate bank account? IRS audits on small businesses, especially real estate businesses, have increased. They are looking for ways to recover all of that money they gave out. So please make sure that if you do have a business, that you are treating it like a business. You're not commingling. You're not doing anything under your personal bank account. So if you don't have an entity, you want to go ahead and make sure that you have one set up by the end of the year. If you incurred any expenses, make sure that you've recorded all those expenses in the bank account. And you may be asking, hey, how do I get this done? Well, there's something that we call cash sweep. So let's say you spent $500 in April, but then I'm telling you to set up your business now. Now you've set up your business. What you want to do is to make a capital contribution to your business and then reimburse yourself for whatever expenses that you incurred personally on behalf of the business. Get that done before year end so that you can legitimately show that you are carrying on your business in a business-like manner, earning profit. If you don't do that and you get audited, the chances of those deductions being disallowed are pretty high. Okay, so let's keep going through the list here. If you own investment property that was foreclosed or sold as a short sale, have you considered the impact of your cancellation of that income? And the reason why I'm bringing these things up is these are things that we've seen over the years that tend to trip up real estate investors, either that they were not properly told how it's going to impact their taxes, or they were not informed, or they heard something in front of the room and it doesn't really apply to their specific situation. If you generated any kind of active real estate income, have you considered restructuring your business to minimize the impact of self-employment tax? So we all know that there's like several real estate strategies out there, right? There's like wholesaling, there's rehab, and there's landlord, and there's sandwich leases, there's commercial real estate, there's notes, there's bird dogging. Each real estate strategy is different. right? So when you're thinking about your entity, when you're thinking about taxes, you need to think about the tax impact of your real estate strategy. You need to think about your asset protection impact and compliance. These three things are very critical. So what works for a landlord, somebody that's a buy and hold investor, may not work for you if you're a wholesaler or you're a rehabber. So you want to take into account the kind of real estate income that you're generating and looking at the impact of the kind of entity that you have in order to minimize the impact of the taxes that you have. So here I'm talking to mostly my wholesalers, my rehabbers, my realtors. You have active income. If you have a single member LLC, you are paying the highest amount of taxes right now. So you definitely want to review the entity structure that you have, and it's possible to get it restructured before the end of the year to save you on taxes. Okay. So let's move on to the next list. If you have significant real estate deductions, have you registered a business in order to minimize your audit exposure? This one is a huge item. Most of us have startup costs when we start this business, but how you deduct it matters, right? You're supposed to be able to do startup costs and making sure that you structure your entities in such a way that you are able to claim these education expenses. If you have significant business expenses, but already have a registered business, like you have a single member LLC, have you considered converting to a multi-member LLC to avoid an audit flag? Have you looked at the impact of wasted deductions? A lot of people ask, hey, what is wasted deductions? Wasted deductions are all those things you heard from in front of the room that you can deduct. But then when you come to your own individual tax return, it really doesn't matter, because either they are passive losses that you're not able to claim, or your income is too high, or where you are claiming them on the tax return does not matter. So because of that, you might say, oh, I'm going to expense all my repairs. But if it goes into the passive activity loss bucket, it doesn't matter. So you want to make sure that you're not just looking at your return saying, oh, I can claim all these deductions, but did you actually really claim them? You know, it's same thing with your itemized deductions. You could have all this charitable contribution. You can have a huge amount of real estate taxes, home mortgage interest, medical expenses. But if you're getting the standard deduction, all those deductions are wasted because they're below the standard deduction limit. So that's why it's important to look at year-end tax planning and look at your tax picture to make sure that the expenses that you are claiming or you're being told to claim are not wasted. Okay. Do you understand what the tax filing requirements are for the states where your business is registered, such as your annual filing, personal property tax returns? If you own investment property, have you considered conducting a cost segregation study in order to increase your depreciation expense? And then finally, if you bought or sold property in 2022, have you considered the impact of capital gains, rehab expenses, properly calculated the basis, depreciation, recapture? All of that comes in when you sold a property, especially if it's an investment property. Okay, so I'll pause right now before we move into the advanced strategies to take any questions that anybody has before we move on.
Abiri, will you be talking in an advanced session about the opportunity zones at all?
Yes.
Okay, super. Thank you. Anyone has a question, just put up your hand
Or you can type it in the chat, either one.
or in the chat. True. Yeah.
Okay.
You know, a lot of people think this is simple, but I can tell you from being audited in my early days of being audited twice, it's not. There's so many little things that they can get you on. So having, you know, this is why Abiri is one of our preferred vendors. Is she really knows her stuff. You know, we have a normal accountant and we have Abiri, and it's sort of like a secondary check, because there's a lot of normal CPAs that miss stuff, believe it or not. Is that correct, Abiri, that you find with other real estate investors?
Yes, not every CPA is real estate focused. So you want to make sure that you are working with CPAs who know about real estate and understand your specific real estate strategy. right? Not all CPAs are created equal, okay? What business entity works best for wholesale fix and flip, and what business entity for buy and hold rentals? For wholesale fix and flip, depending on the kind of income, I usually would start out with a multi-member LLC. At a certain point, we do need to look at an S corp, but it depends on how much income that you generate overall, because we take into account the impact of like payroll taxes and all that, and deciding whether or not it makes sense for you to switch to an S corp. For a buy and hold, you can really go with a multi-member LLC or a single member LLC, but mostly a multi-member LLC, because with the buy and hold, even though we're worried about the taxes, we are more worried about asset protection, right? Because when you have a real estate property that you're holding, there are creditors and there are people out there who want to supposedly slip and fall on your property, and that can potentially sue you. And if you have equity in the property, the fair market value less the loan amount, and you have significant equity, you are exposed. So when we're looking at a buy and hold landlord, we're not just looking at the tax impact of the entity structure that you have. We're more worried about the asset protection impact and making sure that you protect the assets and the equity that you have in the property. Remember that just because you have a property in an LLC does not adequately protect you, right? It protects you from the top-down creditor, but may not necessarily protect you from the bottom-up creditor, meaning that somebody can still sue the LLC and have access to the equity that's in the property. So you want to be looking out for like making sure that you put a friendly lien on the property or getting good umbrella insurance, making sure that you have a property management company. Even if you're the manager, you have a separate property management company dealing with all of that. In terms of taxes, it doesn't matter whether it's a single member or multi-member LLC, the tax attributes are the same. You know, if you do make over $150,000 and you have a rental property that has losses, you have passive activity losses, you are not able to claim that except you're a real estate professional. 2 requirements to be a real estate professional. 1, that you spend more time in real estate than in any other active profession, and not or at least 750 hours in real estate, which is about 14 hours a week, okay? When buying a small commercial property to totally renovate, does cost segregation make sense sooner rather than later if running a buy and hold strategy? I would say later, because you want to wait until that property starts generating income in order to do your cost segregation. And here's the thing, you don't necessarily have to do cost segregation at the beginning. You can do cost segregation at any time, right? And you don't have to cost segregate all of the assets. You can componentize it and do it gradually. You don't have to claim all those expenses, because remember, we talked about not having wasted deductions. But it's better to do it later once the property is placed in service, that's cash flowing and stabilized, then you want to consider cost segregation. What is the Social Security tax cap for people both W-2 and self-employment income? What tax rate would that be? I'm not too sure of the tax rate because it's based on the filing status that you had, but I think it's about over 140 right now for the Social Security tax cap. So if you make over $140,000, there's a cap. You no longer have to pay the Social Security tax. Okay, so now let's move on to our advanced strategies. Of course, if you have any questions, please leave it in the chat. I will come back to it later. So continuing on, these are some advanced strategies that you can utilize to help bring down your tax liability. Consider investing in oil and gas, because you are able to use those intangible drilling costs and you are able to write them off 100% in the first year. You're able to 1031 into a large investment property to avoid the capital gains tax. And then you can also use the qualified opportunity zone, and you can actually pair that with an oil and gas intangible drilling cost. 1, to defer your capital gains to get cash flow. And then when tax is due in year 7, you use the depletion allowance, the drilling cost depreciation, and step up in year 6 to significantly cut down your taxes to around 60 to 70%. So there's a way to combine the qualified opportunity zone and the oil and gas strategy to significantly reduce your tax liability. You can also use a charitable structure. I'm going to talk about that later on in terms of the things that you need to that you can take advantage of to help bring down your liability. We've sold out of 3 main strategies for 2022, but there's still some strategies that you can use, which is the oil and gas. You can use the leverage charitable deductions, and then you can use the structured ownership program. I think the one that we've run out of is being able to use the solar panels, where you can invest in solar panel and get 100% deduction in the first year. But you can still use the LCDs, the gas and oil, and the SOPs to help bring down your strategy. The solar panel, that's what I was talking about, is going to be available again in 2023. Okay, so I will pause here to take any questions that you have on the advanced strategies before we move on. All right, go ahead.
There's some in the chat there, Abiri. From Amin Shah to everyone, what business entity works best for people with both W-2 and self-employment income? What tax rate would that be?
Okay, I'm not seeing it, so maybe can you read it out to me again? Maybe he sent it directly to you.
Yes, Amin asked, what business entity works best for wholesaler / fix and flip, and what business entity for buy and hold rentals? What would be the best entity? 1, 2, or what structure?
Oh, okay, yeah, I talked about that. For fix and flip, it's mostly the multi-member LLC, and then moving on to an S Corp once your income starts exceeding $150,000. So the multi-member LLC into the S Corp. But if you're buy and hold, then it's mostly the multi-member LLC, not just because of the tax benefits, but also because of the entity structure and benefits. So most of the time, when we look at all the strategies, we found out that a multi-member LLC is usually the best because it helps to capture everything in terms of strategy, tax-wise and entity structure and wise.
Okay.
What is, go ahead.
Okay, so the next question is, what is the Social Security tax cap for people with both W-2 and self-employment income? What tax rate would that be?
Okay, I had already responded to that, but I was saying that it was over 140K.
Okay, so there's a lot of people who don't know what cost segregation is. What is it? What is the point of at what point should you do that in your real estate business? And is there a huge cost to this?
Okay, so cost segregation is really a strategy that you use to break down the cost of a property into several components. Most of us know that if you buy a property, $300,000, you just have that one line item, sales price, $300,000, closing cost, $10,000. So in total is $310,000. So when it's time to do the depreciation, you would split it between the cost of the land, the closing cost, and the building. The building is depreciated over 27.5 years. However, within that building, there's all kinds of other assets that we will consider FF&E, furniture, fixtures, and equipment. There's your doors, there's your windows, there's your boiler, there's your heaters, there's your fridge, there's the heater, there's the stove. There's all these components, personal property, that if you moved it will not cause a structural damage to the property. So you are able to segregate those costs and depreciate them faster. So instead of depreciating it over 27.5 years, you're able to segregate those costs out and depreciate them faster over 7 years, over 5 years, over 10 years, depending on the kind of asset. So that's a strategy that you can utilize to accelerate your depreciation. Again, not everybody needs to do cost segregation, because like I said before, when you do cost segregation, you could end up having wasted deductions. So this is it's an advanced strategy that you want to be careful that you pull out of your hat once you've done all of your planning and stuff, and then you still are looking for deductions out there. Then we will go look at the cost segregation. But we utilize that a lot for our clients as a way to bring down their liability. So it's just really taking that one sales price that you have on the property and breaking it down into several components so that you can depreciate some of them faster. Okay.
Awesome. So Wade was asking, is there a penalty if I put my realized gains into QOZF this year, file my 22 taxes, but the fund fails to invest on a qualified property in 2023?
Okay, so I'm not too sure how to answer that, but I could answer that based on what I know about the 1031s. If you invest in a qualified opportunity zone, I believe that you're able to do the capital gain. However, if it fails to invest and they return those funds to you, then you would have to go back and amend your return. It's almost the same thing as a 1031. If you're doing a 1031 exchange and you identify your property in 2022, but you have 180 days to close on it in 2023, if you do not close on that property in 2023, you have to take that out of your tax return. 99% of the time, you're supposed to file an extension and wait to make sure that you are able to meet that 180-day requirement and that it performed before you file your tax return. So if you have a qualified opportunity zone or 1031 exchange that crosses years, we usually advise that you hold up, file an extension, and wait for that 180-day requirement to be met. And then if it fails, then you cannot, you would have to pay the capital gains. And then if it makes it, then you can go ahead and defer it. So Thomas, oh, thank you for putting that. I knew it was over 140. I wasn't exactly sure the amount. So yeah, the Social Security wage cap is $147,000. All right, Wade, I understand, but self-employment wage pays double the rate. Okay, I see what your question is. So let's go back to what Thomas posted here. So we have 15.3% self-employment tax, right? 12.9% is for the Social Security, and then 6.2 is for the, 2.9 is for the Medicare. The employer pays 50% of that, you pay 50% of that. If you're self-employed, it's still the cap of 147, and you don't have to pay the Social Security tax at the 12.9%. So it doesn't matter whether you're self-employed or whether you have a regular employer, the Social Security cap is 147. Now, if you have a regular job where you've already exceeded that 147, and then now you have self-employment income, when you do file your tax return, you are going to have excess Social Security taxes that are withheld that could be refunded. Unfortunately, whatever the employer pays, like if you have an S Corp and you're also getting a salary from the S Corp, unfortunately, the employer portion that is paid is not going to be refunded. But if you end up overpaying on Social Security taxes because either you have two jobs or you have a regular job and a self-employment job, you will get back the excess Social Security taxes that you paid over and above the 12.9% of $147,000. Okay. All right, so let's move on to the rest of the strategies. All right, estate planning. This is not really a year-end strategy, but still something you want to do for wealth building. So it's not a tax year-end strategy, but it's more of a wealth building year-end strategy, making sure that your estate plan is up to date, your wills and your trust, your healthcare directive, your financial power of attorney, to check your beneficiary designation on your insurance accounts, retirement accounts, make sure that you've updated them. If you have births, deaths, divorces, marriages, this will be the time to review your estate plan to make sure that it's up to date. Review your car and homeowners insurance policy. Another thing that we suggest that would help you for taxes is review your year-end charitable contribution checklist. So there's little things here and there that you can do for deductions. So let's look at some ways that you can donate. You can donate cash. So giving cash is the most straightforward way to donate. Typically, your deduction is equal to the value of your gift, except there's any value that you received. Always make sure that you have a receipt because you need to provide a receipt, anything that's over $250. You can also contribute to a donor advised fund. A donor advised fund. Hey, was somebody saying something? Okay, you can contribute to a donor advised fund. A donor advised fund is like an investment account that you set up for charity. So you can contribute to it before year end without necessarily designating a charity where the money is going to go to. You really can take your time, 5 years, 10 years, 2 years, 3 years, to be able to identify the charity. So if you have some significant cash that you want to donate, but you don't know yet which company you want to donate to, you can set up a donor advised fund and contribute to that, get the tax deduction for this year, and then have time as the value of that asset is growing on which charity that you want to invest in. So you can have, there's DAFs over $25,000, there's DAFs under 25, and then you can also have a directed contribution, which is contribution that you give to charities or grants to individuals that are made within 1 year. So these are 3 ways that you can contribute and use a charitable deduction as a strategy for your year-end tax planning. Okay, so I think that is pretty much it. I will open it up for questions then until about 10 minutes that I can take to answer any questions.
So Abiri, just one quick one here. So if a person wanted to engage with you, they could use their normal bookkeeper and then you come in, or do you like to be involved in the month to month of things, or, how does your process work?
We're very flexible in terms of how you work with us. You can either use us as your accountant who prepares your return, but if you also want us to handle your bookkeeping, we can do that. We have a bookkeeper on staff who can work with you. If you want us to also play the financial planning role, we can play that, or if you have a financial planner that you're already working with. But we prefer where you have like a one-stop shop, because sometimes the bookkeeper is saying one thing, the financial planner another thing, the estate planner something else, the attorney something else, your coach something else, and then you're confused. So one of the things that we have is we have an overall wealth building program where you're able to bring everything under one umbrella. And we're kind of like acting as a hub, so that even if you had to bring in the other experts, everybody is on the same program in terms of what it is that needs to be implemented for your specific situation.
Okay. Now, you did refer to multi-member corporations or LLCs. What is your thoughts on utilizing trust instead of LLCs, or how do you look at the role of trust in this wealth planning?
Trust is very good. Trusts are very good for estate planning, but they're not necessarily good for asset protection. Remember, a trust does not give you limited liability. A trust can still be sued, but you can use a trust for privacy and you can use it for estate planning. So sometimes what we say is that, hey, you can set up a trust and then make the LLC the beneficiary owner of the trust, right? Or you can set up an LLC and then have your trust be one of the partners in the LLC. So you can kind of use both together to work for you. But understand that a trust can never replace an LLC, because an LLC gives you limited liability protection, but a trust does not.
Okay. And then you would help the person who's setting up their business from the beginning. Would you structure it as a simple structure, or would you go into, S Corp, C Corps, and all the different other types of options they have, or would you start them off with just something simple to begin with?
It depends on what they have, right? It depends on what they have going on, because we have some people that come in and they have a lot going on and they do need to move to an S Corp structure immediately. And if they do need to do that, we start out and we will go ahead and get the S Corp set up. Now, keep in mind that an S Corp is an election that you make with the IRS. It is not an entity structure. So you either have an LLC, right? Or you have a C Corp, but you can file an election for an LLC or a C Corp to be classified as an S Corp, right? And we do that if you're trying to save on, payroll taxes and all that, and able to contribute to like retirement plans. But in terms of the decision, we usually start out everybody with an LLC, but depending on where you are in your investment, you could have generated a lot of income. Some people had real estate is cyclical. One year you have really high income, another year is really low. We're getting ready, the real estate market is coming down, it's cooling down a little bit. Some people are starting to experience losses. You may not need an S Corp this year, but there's other people who have made over like $400,000 and may need to go to an S Corp structure immediately. So it's a facts and circumstances issue. We look at each person individually and come up with a personalized strategy that works for them.
Okay, thank you. I'm just going to let other people jump in here and
Duncan, your audio has cut out.
I'm going to let people type in chat. They can raise their hand if their camera's on, or they can use the little reaction by raising their hand there, and we can unmute them. I know this tax stuff is complicated. But I will say that there's no question that is a dumb question. If you don't have a particular issue you want to discuss, but you'd like to keep it private, Iberi, on your website, you want to tell them how, that you get a special offer through Iberi based on what you need through Boston RIA. And on our website, can you explain how that works?
Yeah, so what you do is when you go on our website, they're going to ask you for your referral source. Please make sure you're either picking Duncan or Boston RIA so that we can identify you. When you come through the Boston RIA or through Duncan, you get a discount as well, because we've been partnering with the Boston RIA for years now. And you can, decide how you want to work with us. Like if you wanted to get a tax quote, or you wanted a consultation with me, or you had a question of financial planning or bookkeeping, you would select what service you want. And then our business development specialist will reach out to you, and then we'll take it from there.
Okay.
No, I don't have an office in Boston, but we work with clients all over the country. I actually have a couple of clients in Boston, actually.
Yeah. I've actually seen, since I've known you for so many years now, I've seen your business grow. You've grown throughout the National RIA, the National Real Estate Investing Organization. Their chapters besides Boston, highly recommend Iberi. So you're in really good hands. And it's just a process of, you guys got to start and set up a company. That would be your first step. Next, have that consultation, what you want to do, what investing strategy you're using. So, don't leave it to the last minute. When would you say start? I mean, people have got to start now for, this year,
Yeah, it's already,
the last minute.
you have 31. I don't really say you have 31 days, right? Because you have to think about the fact that this is a holiday season. So you have to discount about 10 days. So you really have about 20 days to implement whatever strategies that you have. There are some things that you cannot do after December 31st. So this would be the time, if you're serious about getting your books in order, about kind of taking a look. We offer year-end tax planning. Most of our clients in the wealth building program, we insist that they do year-end tax planning, because we don't want to be fooling around with your taxes end of March, April, when everybody out there in the universe wants to get their taxes filed and are just concerned with compliance. As a real estate investor, as a wealth builder, you should be looking at your taxes right now, and not necessarily competing with everybody else come, March, April. Take a look at what you have right now. If you have a significant event that happened, this will be the time to kind of, put a check on it and see what happens and what strategies you can implement before the end of the year.
Yeah. So these are things such as putting your money into an IRA, possibly going out and buying a new vehicle, and that sort of thing, correct?
Yes.
Yeah.
Setting up 401ks. You can set up a 401k before December 31st, but you don't necessarily have to fund it. You have up to tax filing time, including extensions, to fund it. But you needed to have set it up before 12/31 in order to take advantage of it.
Okay, awesome.
So I'll take one last question. Bridget has a question. Hi, Bridget. All right. Do you recommend having a holding LLC in Wyoming to only hold your properties and have a trust as the owner of the LLC? I'm not really a fan of out-of-state LLCs like the Wyomings, the Nevadas, Mars, Jupiter, the whole 9 yards. I'm not really a fan of those, simply because if you get sued, you are going to be sued in the state where the property is located, right? So even if you form a Wyoming LLC and you have a property, let's say in Maryland, or you have a property in Massachusetts, it's the local laws of Massachusetts that are going to govern that lawsuit. So you may say, oh, I have an LLC in Wyoming, they're not going to be able to find me. Guess what? If you're the defendant and you don't show up to court, guess who's out? You, right? So there's a lot of things that people hear in front of the room that doesn't really make sense when it comes to the nitty-gritty of what actually happens in court and what actually happens on your taxes. So if you've already formed it, it's fine. That's what we tell people. But if you haven't formed it, you are better off having an entity, especially if you're buy and hold, where the properties are located, because it's the laws, the LLC laws of that state and the property laws that are going to govern any legal issue that arises from dealing with that property. All right, absolute last question, because it's 8:15. If I have short-term capital gains, okay, wage and RIP, okay. Will the business loss first deduct the short-term capital gain, then the wage in the state of Massachusetts? It depends on the kind of loss that you have and where the losses are coming from. If it's real estate losses, it may be limited depending on what your income is. If you make over $150,000, you're not able to claim the losses. If it's a limited partner business loss, you're not able to claim those losses. So there's all these other requirements that you have to go through before before the decision is even made of what you can use those losses to offset, and then what happens on the state side. So there's not a general answer, because it depends on, first of all, what your AGI is and what kind of business loss, where is it coming from? Is it coming from an active business? Is it coming from a limited partner business? Is it coming from a rental property? Is it a loss from a general business? All of that determines what you can net it against. All right, so with that, I am rounding up. Thank you guys so much for having me. If there's no other questions, I will be signing off shortly. Thank you, guys.
I just think the website again, Iberia, is the wealthbuildingcpa.com, correct?
Yes.
And Boston is the code in the drop-down box that you'll get your discounts by being a member of Boston RIA. And I say, please, get your stuff in order before the end of the year. Save yourself a ton of money. If you're new, get your plan going. Talk to her business development manager. Get an appointment with Iberi. She can help you out a lot. Believe me, you don't want to be sued. You don't want to be audited. Get your stuff together. Have a solid foundation, and you'll feel a lot more confident as you go down your path to success. So we are going to cut the meeting a little bit short tonight. Iberi has a big event with her church. So she was so kind to step in at the end of the year to make sure everybody understands the importance of tax planning and wealth creation. So once again, Iberi, thank you very much. Everybody else, before you leave, make sure you put your have, need, or want into the chat, and then copy and paste it and keep it. This meeting will be up for replay on our social media channels. However, the chat box is not. So please make sure, copy and paste it. There are always buyers. And look at our website also if you need money. There's a lot of money out there right now looking to go into doing some deals. So we have everything you need. If you're not a member yet, please contact Kelly, text her, and she'll get back to you during the week to set you up, and then start enjoying your membership benefits. Remember the free tickets, the free courses, the not only Home Depot, we got FedEx, 50% off Office Depot. We got 45% off of FedEx Express. We have renters insurance discounts, lots of different things going on. Please check out our website at bostonrealestateinvestorsassociation.com. Sign up for the newsletter so you can get alerts with deals coming through to your desk if you haven't done so yet. Other than that, guys, I wish you a Merry Christmas and a Happy New Year. Watch our calendar as we will be starting our networking in-person events in the new year. And they will, like I said, be on our calendar. So instead of just doing everything virtually this past year, we're getting back out there, and networking is key in this business. So thank you very much for attending. Have a great end of year, and I look forward to seeing you in the new year, everyone. Ciao.
Thanks, everyone.
Thank you.
And don't forget our investor-friendly realtor, Sarah. Go to her
Yes.
website.
Find me on
Yes.
Facebook. Find my page and find my profile and friend me. I will accept it right away.
You'll have deals for you. All right, guys.
Yes.